Hello, everybody. Welcome to another edition of Transportation Insights. My name is Patrik Berglund, and I'm joined here today by Christian. Christian, welcome and thank you for joining us. Could you give the audience a short introduction of yourself and your business?
Of course. Thanks a lot, Patrik. Thanks a lot for having me and having us from Container xChange. My name is Christian. I'm a co-founder and CEO of Container xChange. We're an online platform for container logistics, essentially giving our clients the ability to flexibly lease in and out container assets on a spot basis.
All right, cool. That was precise. One of the biggest observations we have in today's market is the difficulty and the imbalance of container boxes, right? Firstly, as the Covid-19 sort of hit China and Far East, we saw this difficulty with congested ports and difficult for European and American exporters to get a hold of empty boxes. What do you know about today's market? Where are we now? Anything to share?
Yeah, sure. So it's still very, very differentiated across the world. So in some markets like China, like Shanghai, Qingdao, it's starting to clear up. As you mentioned, congestion was a big part of the root cause of the mess, so to speak. There wasn't enough truckers coming back from Chinese New Year to actually drive the containers to and from the port. So that created a lot of sort of ripple effects throughout the entire container logistics value chain, and hence container shortages started to show up in Europe, in the US, like we mentioned. And by now, if we look at our container availability index, we see that improving slowly but surely, because carriers and other market participants have slowly adjusted to the changes in market situation. Essentially, the different imbalance situations have repositioned a lot of empty units, have rerouted their trade flows in some parts, so that's slowly getting back to normal.
In terms of that index, can you just briefly explain the listeners what it's actually tracking and how it's sort of developed, so that we get some perspective on the movements here?
Of course. So on xChange, we basically, as I said earlier, give our clients the option to offer all of their container equipment for spot lease. That can be leasing companies, traders, but also large shipping lines, container lines. And on the other side, we have container users like freight forwarders, NVOs, but also, again, container liners who use that equipment on a spot basis. And to support decision-making there, we have developed a container availability index, which basically tracks, on a global scale, tracks a couple of million containers and their movements, basically imports and exports out of the most important port locations. And by looking at the timing and the difference of flows, we basically derive an indication of container availability, including a forecast over the next 4 to 6 weeks, roughly.
That's super relevant and very interesting, I can imagine, for a lot of exporters in particular these days. But can you say something about how it sort of moved from, let's say, a more normalized market, maybe in January or something like that, to what went into, how bad did it look, and how you said it's slowly improving now? How much is an improvement? Can you give us some a perspective on these movements?
Yeah. So if you look at we're just trying to think back to the data that I just had a look at. If you look at Chicago or even Long Beach, we had a massive decrease in container availability. So whereas usually, our index goes from 0 to 1. 0 means absolute deficit of containers, 1 means absolute surplus, and 0.5 is basically a balanced market. And Long Beach is always somewhere between 0.6 and 0.8 on the scale. And it actually went down to 0.1, 0.2, indicating a massive sort of demand overhang in those ports and regions.
Wow, and on that particular port, now that it's sort of stabilizing again a little bit or improving a little bit, what sort of number are we closing in on then?
I'd have to look at the current number, but we're slowly approaching the 0.5. It's
all
not
right,
yet
that's
balanced,
fantastic.
But it's of course creating a little bit of relief, especially for the North American exporters who slowly have basically equipment to work with.
Cool. And when you have these kind of disruptions in supply chain, what kind of costs comes with this? What's the implications? And can you a little bit bucket it for us? This will be shippers, carriers, leasing companies. What are we looking at here?
Of course. So if you look at, so how do we best bucket it? So if you look at the exporter side, on the shipper side, of course the costs come down to non-availability of equipment, blanked sailings. What do I do with my factory output if my factory is running during Corona times, during COVID-19 times? Where do I get the boxes from? And if I get them, at what cost? So oftentimes pickup charges for this equipment increase massively. Then on the other side, on the importer side, you oftentimes have a massive increase in demurrage and detention charges because the terminals can't release the equipment fast enough, because your consignee can't unstuff the equipment fast enough. He doesn't have manpower, not enough workforce to unload the containers fast enough and return them to the shipping lines, and they of course basically make a profit out of it and charge detention fees. And then on the equipment owner side, you have a massive increase in container repositioning costs because these containers that are suddenly stranded in unexpected locations where usually there would be enough export cargo to basically remove or evacuate the boxes again. Suddenly you don't have that anymore, and you have to move those boxes out empty. And that's relevant for all container owners, be it leasing companies or large shipping lines.
Great answer, and thanks for structuring that a bit for us. And I also think that potential cost of lost sales might be factored in from a shipper point of view. And also, interestingly enough, where we have this front haul, back haul, normal sort of cheap rates to go back haul, we saw also a significant spike on the short-term market on export out of Europe in particular. Any party in the supply chain that you think this is particularly hurting more than anyone else?
On the container supply chain, I think it's really hurting the small freight forwarders, which usually have small shippers. On the other hand, they don't have IKEA or Nestle, but they typically work with the smaller shippers, consignees, lower volumes, and those are the first ones that get hit, that get crowded out, that don't get the equipment, that don't get the slot on the vessel, or where just the cargo is not available.
Yeah, good point. What are other key concerns? I heard you guys talk about partner reliability before as well. Is that one of the top things on mind from your point of view when you think about your customers or even the ecosystem in a broader scope? Can you say something about that at all in terms of what you're hearing in the market?
Of course, yeah. So again, coming back to sort of the smaller freight forwarders, I mean, how they structure their business is basically they have one office and then they work with agents or partners all over the world. And for them, it's crucial to have the right partners, the one with high operational reliability, that they can actually perform the work at the right time in the right manner. And then, of course, financial reliability. So can they pay their bills? Can they pay their bills on time? And I think that's especially relevant during crisis. Also relevant during normal times, but during crisis that becomes paramount. I'm focusing on who do I actually work with, and if the partners that I usually work with can't deliver business, can't perform operationally, how do I get new partners, reliable partners, as fast as possible? And talking to, sorry.
No, go ahead. Yeah, great points. I like it. Go on.
Okay. Talking to our clients, we saw that that's a huge issue that's top of mind for them. And a lot of them turn to the data that we have on xChange about partner performance, check out how can I find new partners, who can I work with, who can I trust, and I mean that's basically how, as a small freight forwarder, I have to prepare to get through this crisis.
Cool, very good. I gotta admit, I'm worried about the slightly smaller forwarders in particular, and especially as these these concerns sort of ripple onto the shipper side when they think about which ones should they work with in terms of stable business partners, and definitely leaving them at a disadvantage. But any thoughts from your end in terms of what we're heading into now with let's say Europe and US seems to be quickly closing down? What will be the consequence on empty boxes, equipment availability that you foresee?
Well, I think over the midterm, I wouldn't say short term, but I'd say midterm. So all the players along the container logistics chain or logistics value chain will adapt to the new normal, the new imbalance of trade flows. And so I expect sort of these short-term spikes in freight rates or equipment scarcity, etc. I expect that to go down and to reduce over time. However, I do see, I mean, I think the US is still underestimating what's coming. And I now also here in Germany, I read this morning sort of what the growth forecast, or actually the GDP reduction forecasts are for this year and next year. We're heading into a very, very big recession, which in turn impacts freight volumes and hence demand for vessel space and container equipment. And so we'll see even more overcapacity than we already had over the next, I don't know, foreseeable future, 1 to 3 years.
Yeah, it's going to be interesting to see. I mean, the carriers are quickly pulling out capacity as fast as they can, and 2 out of 3 alliances now has announced substantial reductions. And the question will be whether it's enough. I'm super concerned that as Europe and US closes down, it doesn't matter that the Asian side is sort of picking up because the buyer side is doing the opposite, right? And I read this morning really positive news about an uptake in China, but let's see, as you say, maybe the worst is ahead of us, especially in the US, and that will have the same consequence in a way, because you need both buyers and sellers to interact. So that's going to be super interesting.
How does that sort of, maybe one question more from my end, how does that impact sort of your Xeneta benchmark rates? Because, you know, especially with that increase in uncertainty, you should see a bigger spread or a bigger volatility in contracted rates.
That's true. So there's this sort of plays out differently on different corridors, right? I was very surprised when Europe to Asia exploded like it did, but obviously because of the equipment imbalance, right? But then you have to, there's so many things to factor in. Let me give you a quick example, right? IMO 2020, we came into 2020 with Q4 rate increases on the short-term market. Then you have a tender cycle in Asia, Europe was supposed to be Q1, but maybe a little bit Q2 this year, which is just now gone. There's very few companies tendering, and if you have a long-term contract, then even getting the carriers to hold their end of the bargain is difficult, right? But at the same time, the spot market is climbing downwards in general. So I mean, there's so many things that you need to factor in and monitor now. And the big sort of plus that I see in today's market relative to 2016, when the market was really weak and Hanjin went bankrupt in the middle of 16 August or something, if I recall correctly, is that the rates are actually at a quite healthy level. So if volumes were to sort of rebound at some point, not too far into the future, there might be a semi-healthy market for the carriers there, but it's definitely climbing downwards, right? And then finally, to add to your question, what the shippers need to be cautious about now is it a viable rate that I have? And we see some of our customers going now with more of a quarterly cycle to tender more frequently, because they're not really rigged to be in a spot market. So even they can move some product on that, right? But in general, the overall volumes that they have, so substantial amounts, right? They can't live with the uncertainty of a fast-moving spot market. And that's the challenge, right? And yeah, I'm really cooking this down to a short answer. But I think this is also why we have launched this Transportation Insights, in order to sort of complete the picture more now with guys like you and companies like yours to beautiful, I like that, with complementary information, because now there's so much that you need to look at in order to make sound and smart decisions. But Christian, we're very fast running out of time. Any final comments or anything from the market that you see that the audience should be aware of and listen to? Any final thoughts from your side?
No, I think actually we covered a lot of ground. So that was a very, very intense, I don't know, 10, 15 minutes. So
yeah.
thanks a lot for that. I think it'll be super interesting. The next, I don't know, 3 weeks to 3 months will really show where we're gonna be heading over the next 3 years. So exciting times, and I think we're writing history as we speak. And everybody needs to stay on their toes because nobody knows what's happening.
Well said, Christian. Thanks again for joining. Really appreciate it. Now, to all our customers, you can continue the conversation and you can post new questions in our customer discussion forum. The link is here, community.xeneta.com. And with that, Christian, stay healthy. Thanks again, and we'll speak soon.
Thanks for having me. Bye-bye.